Hey everyone, how's it going? My name is Richard Moglen and welcome back to our stock market outlook video sponsored by MarketSmith. As always, we're going to cover a ton today, including the market indexes, leading stocks my watch list and how it performed over the past week. I'll talk about a few different sources of sentiment, including my Twitter surveys, the put call ratio, and the name exposure index. Then we'll discuss the Ibd Big Picture article and kind of wrap things up with the Wishing Wealth Gmi Signal. At the very end of the video, I'll kind of put all the different sources of information together and give you my take on the overall health of the market. If you do enjoy my analysis at any time and find it helpful, please go ahead and take just a few seconds and leave me a like down below. Just tap that button. It really helps me out and the channel. And of course, subscribe if you want to see more videos just like this one every single week. And with that said, let's dive right in with the market indexes and start with the Nasdaq Composite. So taking a look at the Nasdaq Composite, you can see we started the week pretty negatively on the 13th here with a poor closing range. Then we gapped below the 50-day moving average. Definitely a negative sign, but we did hold this prior week's low, which is very important. And then on this day right here, the 15th, we actually had a fall through day if you follow the CanSlim methodology. And if you're curious about what a fall through day is, I made a video completely about that topic, which should be popping up right now and is also linked down below in the description. So basically, in one sentence, if you don't want to watch those videos, a fall through day is basically a signal that a potential new rally could be started and should kind of change your mind about what the current market conditions are. But you do definitely want to see follow through to a follow through day. And we failed to see that on the next day with kind of an expectation breaker after this day. And a lot of growth stocks, even though they rallied hard on this day, especially the semis, Nvidia, AMD, they got hit very, very hard the next day, almost kind of invalidating this signal. But nevertheless, we did hold these lows. This is actually an inside week, if you can believe that. Despite how volatile everything was, this was an inside week on the Nasdaq Composite. And I definitely want to see these lows hold next week. And we did have a little bit of an upside reversal on the Nasdaq Composite, although still a down day on this Friday. And we're now below a declining 21 EMA and below the 50-day SMA. If we go to a weekly chart, you can see that we're below the 10-week as well. So definitely a little bit of negativity here, especially to end of the week. And looking at the overall closing range, it's not great, although we are holding above these lows. So definitely want to see that stick next week. So overall, from this chart, my expectation would be kind of sideways or lower, but we'll have to see what happens in the coming weeks. Moving on to the SPX, let's take a look at that chart here. Pretty similar, but definitely a little bit stronger than the QQQ. Once again, we had a fall through day here on this index, then a negative expectation breaker, but we are holding that 50-day moving average on this index, although we are below a declining 21 EMA. So I definitely want to see that stick the 50 SMA next week, just kind of go sideways, build out. That would be very bullish, and then confirm upwards, breaking above these highs. But if we start to leak lower and break a range to the downside, I would expect us to test these previous lows. So overall, the SPX looks stronger than the NASDAQ, but still a little bit weak. And this volume here is a little bit kind of misleading because obviously this was OPEX week and a lot of options were expiring. So keep that in mind when you're looking at this volume bar. I also like to take a look at the small caps, the IWM. This kind of gives a better sense of how the growth stocks I like to trade are doing. And you can see nice action on this day, then the downside reversal. As you'll see in many individual stock charts, they look very similar to this. And then an upside reversal on this day. So this actually kind of outperformed today compared to the NASDAQ and the SPX. So that could be a good sign, maybe the start of decoupling, but we'll have to see. And we're back below this kind of consolidation level right here. And we're back at the bottom of this base. So definitely, I want to see this break to the upside, get back above those key moving averages. We're below a declining 21 EMA, definitely not a great sign. And for me, let me zoom out a little bit. The best trading that I go through is basically when we're in a nice trending environment, like here when we're above a rising 21 EMA, and we're just not in that right now. This is basically looks like the left side of a base that needs a little bit more time to form out. So we'll have to see where this goes. Looking at the IWO, which is kind of the small cap growth, this looks very similar, but even a little bit weaker than the IWM, back near the bottom of this base, and also below a declining 21 EMA. Next, taking a look at the FFTY. This will also give a sense of growth stocks here. Once again, pretty weak, below a declining 21 EMA as well as 50 SMA. And this needs to kind of build out here, form a tight range, break to the upside, build again, and just kind of form out a rounded bottom. That would be ideal. and that's going to take a couple weeks to really build out. So keep that in mind, and we have to kind of let the moving averages curl up under price, and that would be very constructive, and then we could potentially start a new uptrend. But right now we're in a downtrend, and until we get back above a 21 EMA and kind of build above that, that's kind of my view on the growth stocks and the growth stock indexes. Finally, it's also good to take a look at the ARK funds. They give a little bit of a sense of how growth stocks are doing, although they're kind of skewed to those that aren't yet profitable, so keep that in mind. And this has been hit very, very hard, but you do see some outperformance today versus the Nasdaq with a nice outside bar here, but this could just be short covering. Keep that in mind. And the overall trend on this, you can see we're below all the key moving averages is down. So this has a lot of work to do. And this is kind of skewed a little bit towards, as I said, those kind of unprofitable companies. So this doesn't give a great sense of how all growth stocks are doing, but it's still worth taking a look at this index. So with the indexes and ETFs covered, let's take a look at a few kind of growth stock leaders that are very liquid and kind of act as gauges of the risk on appetite of institutions. So first up, we've got Nvidia, kind of the liquid leader in the semiconductor space here. And overall, doesn't look great. We did have a nice reaction on this day right here, Wednesday, after the Fed announcement, but then we had an ugly downside reversal on higher volume and a little bit of fall through to the downside here on Friday the 17th, although we didn't quite close below the 50-day. Maybe we're right at that level, and we are holding this low. So ideally, this just kind of goes sideways, maybe undercuts, shakes everybody out, and then finishes with a hammer bar, and that starts the bottom of a basing process. And then, like we said, we kind of let the 21 EMA curl up under price and kind of build up this base here. That would be ideal. But if we lose the 50 SMA and just kind of continue on with the downtrend, I think maybe a revisit to the top of the space or even the 200-day, if that kind of coincides with that at this level, would be a logical spot for kind of a longer term bottom to be put in. So keep that in mind. In general, the semis were acting great last week and showing relative strength. Some of them continued that, but Nvidia does look a little bit weak. AMD as well is kind of another leader within this space. And once again, nice action on the Fed announcement, but then downside reversal, but we are holding that 50 SMA. Some of them, like Qualcomm, look a little bit stronger overall, but once again, pretty bad engulfing candles on this day. If we go to Onto, I think this is one that's holding up a little bit better. You can see it's kind of flatter compared to Nvidia, which is kind of leaking to the downside. So these are some to watch, which are showing relative strength, and they are in general still showing relative strength versus the rest of the market. I also want to take a look at Tesla, of course, which is kind of the growth stock leader, and this doesn't look great. I was watching for kind of an undercut and rally off this level, but now we've kind of filled this gap by a few cents, I believe. So this is really where you want to see it build tight ranges and pop up on volume, get back above 1,000. And once again, like Nvidia, start to build that process, get that 21 EMA, 50 SMA back under price and supporting it. And that could be the start of a longer term base. But if this does kind of form a range and break to the downside, I think there's a lot of stops at this level, these levels as well. So this could start a longer term downtrend that no one knows how long it will last. You do have the 200-day back at these levels. So keep everything in mind, be open-minded, be ready for everything. That's a great thing to kind of remember during a correction, and manage risk always as well. There's no need to get chopped up when the environment isn't optimal for your trading conditions. And for me, it's back when the QQQ is trending above these moving averages. That's when I put on my best trades and make the most money. And right now we're in a hard, volatile environment that for swing traders, position traders, it's kind of better to be the majority in cash, if not completely in cash. So keep that in mind. So moving on, let's take a look at a few more names here. Roblox is a leader that was pretty volatile in here and then had a gap down out of nowhere. It did show some performance on this day, retaking 100, but has a lot to prove. And I hate stocks that kind of have unfilled gaps. So we'll see what happens here. And this gap down out of nowhere kind of shows me there's not a lot of support within this name. And this looks pretty much like the left side of a base. So we'll see what happens from here. It would be kind of unnatural if it just kind of goes back to all-time highs in just a few days. So I think it's going to have to build, retake that pivot, and kind of rally from there and kind of build out a longer term base. So if you like the name, if you like the story, there'll be plenty of spots where you can manage risk tightly against a swing low like right here. Basically, wait for those spots where you can manage risk tightly. That's the best way to trade. And lastly, I want you to keep in mind that the leaders in the next market cycle are likely not the same leaders of the past. Tesla, Roblox, Airbnb, Unity Software what have you. So keep an open mind, look for new opportunities, stocks trading near all-time highs and breaking out of new sound bases on high volume. And one group in general that I'm watching is computer data storage. A lot of these names have been acting well. PSTG is another one in here. STX as well. A lot of these are right near all-time highs and above their rising 21 EMA, showing relative strength overall. So keep an open mind. Once again, CIN is another name that's acting extremely well after a nice gap up here. So look for these opportunities, look for new industry groups that could become leaders, and look for group themes as well emerging. And with that said, let's move on to T2000 and look through a bunch more charts and start with potential new leadership. So sorting by the weekly chains, let's start with SWCH, and this is right near all-time highs. It made an all-time closing high and relative strength, closing high today, and overall is right near all-time highs above the key moving averages, showing nice relative strength on Thursday and Friday. So definitely one to watch going forward. Maybe this one goes sideways for a week or two as the market firms up and breaks out into all-time highs, and you can buy that breakout just as the market is coming off its lows. ANET as well, downside reversal yesterday, but is holding that 21 EMA. You did have an entry point here and a really nice gap up on the highest volume ever a few weeks ago. CIEN also really nice gap up on very large volume, going sideways, holding that anchor VWAP, looks pretty good. SIMO, we already talked about, I made a video completely about the stock, so go ahead and check that out, as well as a Substack article as well, analyzing the fundamentals. BLDR trending above the 10-day moving average. Tried to oops reversal today, finished just below the prior day's low, but overall holding nicely above around 75 for the time being, so keep that in mind. Next up, we've got Google, and this isn't really a leader, but I have it on this list because it's kind of important to keep in mind kind of where the money is going, and these big mega caps are often where kind of the tech growth funds go to hide during these times. TDD holding that 50-day moving average, could be starting kind of a bottoming process here, retaking the 50-day, nice oops reversal as well today. Microsoft, similar to Google, not really leading as of this point, but did have a nice close today on high volume and did a little bit of an undercut rally, so it could be starting the bottom of a basing process here. LRCX, another semi name here, pulling back to the top of this base, and I definitely want to see it kind of firm up and kind of move back towards all-time highs. Qualcomm, negative downside reversal here, and you also had a warning sign here, and it's below the 21 EMA as of this point, so definitely needs to firm up, but overall is showing relative strength, and definitely want to see it hold above 170 and this prior swing low. ON also going sideways, retaking the 21 EMA today. Apple above the 21 EMA, but definitely some negative action on this day, and even today, very high volume, and it didn't really go anywhere. Did have an oops, but finished well off the highs. Low also negative action. This was on my list from last week. I'll probably take it off. I don't like the action on this day, downside reversal, and then fall through to the downside. Marvel holding this gap up day low here, and oops reversal today looks decent. Tesla, I already talked about it in MarketSmith. Ford failed breakout here, but is holding above or almost above the 21 EMA here, holding within the structure. I like the shakeout within this kind of sideways move. MXL going sideways just below the 21 EMA here. NVIDIA we discussed already. Next up, we've got POBM, which is below the 200-day, but holding that 50-day here. I definitely want to see it get back above this day's high and kind of pop through that on volume, as well as these KMAs. And lastly, we've got AMBA, which was shaping up well until this day right here. So I'll probably be taking this off this list as below the 50-day moving average as of this point. So overall, in terms of what I'm looking for leadership, I'm looking for liquidity, as well as just holding above the 21 EMA 50-day when the market is below those levels. So moving on, let's talk about my focus list from this past week and how these performed and go through the charts that we haven't already discussed. These we already talked about. GFS, IPO in the semi space here. Looks like it's forming out another base here in an overall downtrend below a declining 10 EMA and 21 EMA. So not really a focus here, but a nice upside reversal and oops reversal here on this Friday. Tesla we discussed. BLD, very negative action breaking these lows. This will no longer be on my focus list here. Is holding near that 50-day moving average, but definitely a very negative bar on this day. SITM looks a little bit wide and loose right here below the 50-day moving average, and definitely some distribution in these days, although not on too high volume. Roadblocks we discussed kind of gap down out of nowhere below all these anchor VWAPs and the moving averages here. DEN also fading pretty hard below this structure. Rivian was showing relative strength early on in the week, but kind of leaked into earnings and had a gap down. And lastly, we've got YELL, which broke these lows here and kind of broke expectations and kind of just leaked down to the 50-day moving average. And in general, a lot of these setups are failing, breakouts are failing, just kind of more indications that the market just isn't right on the long side, at least, for these growth stocks. And now moving on sentiment, you can see we're a little bit more bullish here on my Twitter surveys, but going over to the name exposure index, we're seeing a significant drop from 100 a few weeks ago to now 52, which is a good sign. We're getting back to kind of the range where short-term bottoms occur, so keep that in mind. But once again, all these indicators are very secondary to price and volume action of leaders and the amount of setups available in the market. And looking at the bulls versus bears poll, we're down near 40, but nowhere near kind of touching this green line as of this moment. And lastly, looking at the put-call ratio, we did have this spike, but kind of we're back in no man's land. I would love to see this get back above 1 and towards 1.15. Maybe if we have a big flush downwards, that would occur. So overall, moving on to the Ibd Big Picture article, the headline is stock market falls, but healthcare stocks lift. Russell 2000 a big gain. Watch these networking stocks. Reading through to discuss how we did have a distribution day on the S&P 500, how Goldman Sachs and JP Morgan did take some hits, and they also discussed how the Nasdaq Composite recovered after a 1.4% drop early on in the session, and how the IWM kind of outperformed the other indexes. And they also mentioned some stocks down here. A recent networks, definitely one to watch, holding up pretty well, as well as Edward Life Sciences. So overall, their take is uptrend under pressure. We haven't undercut that kind of first rally day, which is why they're no longer in correction. But we do have one distribution day on the S&P 500, and you've got some leaders up in volume and some down in volume as well. Moving on to the Gmi Signal, this is currently green since December 13th, but this has kind of been whipsawing back and forth here. And we are actually on day 3 of the QQQ short-term downtrend, so keep that in mind. And the GMI score on this Thursday was a 4 out of 6. So overall, putting everything together, my current view is still a market in correction. I really want to see kind of some leadership groups emerge and kind of some firmness and tightness emerge in the indexes and lead names before I'm really ready to put a lot of capital to work. But in the meantime, if the leaders do kind of emerge and show some setups next week, because a lot can change in just a few days, I will be putting on some test trades to kind of test the waters and see if I should kind of increase my exposure based on feedback from the market. So I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. I'll see you guys in future videos. Thanks.